What's up? What is going on? This isn't your typical concentrated liquidity live stream. Or maybe it is. It could be something cool, right? Light up a stogie, talk about investments. What are we buying next? What's going on in the markets? What are you guys doing in the markets? Are you guys buying the dip? Or are you guys selling? Do you guys think this is it? It's over? I don't know, man. I don't know. Nobody knows anything. All you can do is enjoy the ride. Got to be living. Livin, just living. People joining up like, what the hell is going on here? What is this? Just chilling. We're gonna see if we get some people on a Friday night. Maybe some people sitting around, not partying, not celebrating, just kind of chilling and thinking about their next move. What is the next move? I don't know, man. Hmm. September's been a volatile month. Nothing really to do. Just kind of, it really is sitting on your hands, not touching your investments, not touching, just selling everything, trying to stay calm and cool, collected. That's the hardest part. That is the toughest part when it comes to investing. Coming up with the plan is easy. I want to buy something here. I want to buy something there. I want to sell it here, sell it there. That's the easy part. Pushing the button, buy, sell. Anybody can do that. But most people, where they go wrong is they start second guessing. They start second guessing their choices. They don't have conviction in their choices. Or even worse, they tend to follow other people to make decisions for them. You can't have conviction in someone else's decisions. So when you have a volatile month like September, like we do now, it's very tough to hold. So yeah, this is the toughest month of the year. I think it's even tougher than April when everything was crashing. That was easy. Just wait. But here, right now, it's kind of like we've gone pretty much nowhere. We've went sideways in the markets. It's been choppy and things are looking terrible. Things are looking weak. The market's looking weak. You start. wondering, are we going higher? Are we going lower? Do I still have time to get out? Do I still have time to get out and then try to time the re-entry? Maybe get it lower, get a better entry. These things go through your head. They go through my head too. I think about these things. Start thinking, what if I just take all my profits and run? Like we're still near all-time highs. We're pretty elevated in the markets. Why not just sell everything and just call it, Be like, you know what? I'm good with the profit, cash out, wait for the next bear market to get back in. That's the easy answer right now, but it's going through our heads. It goes through our heads every day. We look at our investments, things chopping around. Every day we see it chopping and we're wondering, you know what? I still have time to get out. I still have time to escape. I can escape and avoid possible pain if we draw down. I mean, why not? We're near all-time highs. We've made a lot of money. Why not just sell now and just ride off into the sunset? Wait for the next bear market. But I think this is where most people make a mistake. That's too easy of a decision to sell everything now and leave and book your profits because if, not saying they will, but if the markets decide to go higher, what if? What if that bear market doesn't come for another couple of years? And say we're 20, 30, 40, or even in crypto markets, 100% higher, 200% higher. Tough. That's a tough trade right there. Now, you're on the opposite side of the spectrum. Right now, we're all holding, wondering if we should cash out. We're in the market. Should we cash out? Should we just book our profits? But on the other side, what if you're all cash and you stay all cash until the next bear market? What do you do? What do you do in this situation? Because our plan says this, but we're looking at the market and we're thinking, if I just cash out now, I could probably avoid that next drawdown, that next crash. The thing is, a crash doesn't happen very often. And we just had one in April. These are the things that I ponder and think about. And even though I've been trading for so long, I've been trading since 2009, since the great financial crisis, and it just never gets easy. So, what do you do? Well, I'll tell you what I'm doing. As you guys, some of you follow my posts, some of you are my Discord. I've been selling, as you've seen. I've sold some assets, right? But I'm still exposed. Back in April, in May and June, especially in June, when we hit that, when we were starting to trend up, I was levering up. I was overexposed. And I've been selling simply to cut out a lot of the leverage. I cut out all my leverage and just book the profits and pay myself for taking on that risk, taking on the risk of buying it when there's blood in the streets, buying when everybody was just so negative in the markets. You know, it's funny how everyone became a tariff expert overnight. Everyone knew about tariffs and what it was going to do to the whole market, to the economy, and everything. Everybody knew. I was sitting there buying, and it was tough. I'm not going to say it was easy. It was tough, definitely tough. There were times where or not times, but in every moment I was buying, I was just looking at myself like, "Are you sure? Are you sure?" I wasn't sure, but the way the markets work, it's all based on supply and demand. There was a lot of selling, a lot of supply, a lot of distribution, a lot of fear. And the more heightened that fear gets, especially in a short period of time, the more of a chance of a mean reversion you get. That's it. That was the strategy. There wasn't anything. There's no technical analysis. There wasn't any macro expert view of the markets, right? There wasn't some insider knowledge. It's just 9 times. I wouldn't even say 9 times out of 10. I would say 10 times out of 10 since the markets had been around, since they've been around hundreds of years, markets just go up and to the right. Quality assets, okay? I'm not talking about your shit coins or altcoins. Up and to the right. 10 out of 10 times. Bitcoin, 10 out of 10 times up and to the right. Every crash up and to the right. That's it. I keep it simple. Wearing my McDonald Crocs. This isn't a celebratory cigar. This is just chilling and thinking, because I have been thinking, should I just sell everything? I'm like, man, I took all that risk, bought a lot under 2000 Ethereum. I bought a lot of Bitcoin under under 80K. Should I just sell the rest of it? I've been selling, but should I sell the rest? And I sit here and think, if the market continues to, if it dumps, if it crashes again for some reason, would I be pissed? Yes, I would. Everybody would. I don't care who you are. You will be pissed if you're holding right now and it crashes. You're like, God damn it, I knew it. I had all this time, had all of September, had all of September to dump my bags. I had all this time. There's no excuse, right? But I look at it and like, how far can it go? Okay, yes, you can go far, but it's very important to have time in the market because it's very difficult to time the market. See, I'm sitting here contemplating selling and it maybe buying back cheaper, maybe buying back cheaper. But you have to be right twice. First, you have to be right on the exit. If you sell now, then you better hope that the market does dump. And if it does, where do you get back in? Where do you get back in? And throughout all the fear and if there's blood on the streets, everyone's panicking, the markets are crashing. Will you have the testicular fortitude to jump back in? And maybe you do jump back in at the right time. Would you jump back in with size? That's another variable there. Many people cannot do. You have to get all those things right and perfect. to make it worth it. And 9 times out of 10, you're gonna realize when you do get back in, and if you time it all correctly, and if you get in with the appropriate size, you're gonna look back and be like, maybe you get a 30%, maybe a 20% discount on your rebuy. Was it really worth all the stress? Hoping that the market dumps, hoping that the market doesn't rip higher on you and you end up buying higher, right? Hoping that you even get back in at the right time. Is it worth all that stress? Why put yourself through all that stress? Now you're focused all on the re-entry, hoping that you're going to get back in, whereas you're not even planning your next move as far as investing is concerned. What is your next plan? You're not planning that out. You're just looking at the markets, hoping for a dump so you could get back in cheaper. And that could be detrimental. That could be very detrimental. Lighter fluid ran out, so I had to use the cedar sticks and my pink lighter. So odd. My timing was off. I was like, I'm gonna go light a cigar. And of course, it lit it up initially, but then it ran out. I couldn't time that. I couldn't time that the lighter fluid was gonna run out of my cigar lighter. I feel like I'm committing a crime lighting a Cuban, a Cohiba with a freaking pink lighter. That's what I'm talking about. Life throws you curveballs. Now I'm just here. Finally got it done. Got it lit. Looking up at the sky, wondering, am I still overexposed to the market, or should I sell some more? But then I'm thinking that feels a little too easy. It's too simple, right? I mean, the market has gone nowhere all of September, or even all of August through September. Crypto markets, a little bit down since we hit highs, but not much. Is it too late to sell now? Just want to let you guys know that there's no golden strategy. There's nothing out there that's going to remove all the risk, all of the uncertainty. That's what makes the market. It's uncertain. We don't know what's going to happen. Sometimes you just got to go for the ride. And you have to ponder these things and think, if the market dumps from here, say it crashes 50%, you have to prepare your mind for that. And once you solidify that, because that's what I'm doing right now, I'm gonna solidify this into my mind and make the decision that, you know what, I have enough exposure. If it dumps, I'm gonna be okay. And if we go higher, I'll be okay. Well, that's the preferential scenario. But what this does is that it frees your mind from having to think about it anymore. You make the decision and you stick with it. 'Cause the last thing you want is to be like a chicken with your head cut off, wondering what to do, looking at social media, see what other people are doing. That's usually the wrong thing to do. Mostly you want to do the opposite of what they're doing. But talking crypto markets here. People think that alt season was coming, all that, but if you look at the Bitcoin dominance, it's starting to tick up. I've said this in previous videos. I think we're going to go through a leapfrog phase where the market's going to change. It's going to hand off the baton, the top three, Bitcoin, Ethereum, Solana, handing off the baton. And I think that's going to create a leapfrog scenario where they kind of sort of carry the market higher and higher because this cycle is not retail driven at all. I've been in the crypto markets since 2017. This is not retail. Most normal people don't give a shit about crypto right now. They don't care. The stock market is going higher for them. They don't care. They're like, "Pff, crypto what?" So those that are in the space calling for alt season, I don't think it's happening right now. And for those that have a lot of altcoins, I know it's very painful. But you could kind of see the writing on the wall with the institutions. We have the ETF, the Bitcoin ETF, right? That launched last year, 2024. Then the Ethereum ETF, now the Solana ETF. And what happened when each of those ETFs launched? Bitcoin went through a consolidation phase. Ethereum went through a consolidation phase, which lasted like a year. Now Solana is going through that. You want to look to accumulate during those times. I use concentrated liquidity, but I'm not going to go into that, right? You guys hear all about it. I talk about it all the time. But just the core principle, the core strategy is to stay exposed to the top three, whatever ratio you want. That way you don't have to worry about timing it. You don't have to worry about when Solana is going to pump, when Ethereum is going to pump, when Bitcoin is going to pump. And if you look at the institutions, you could see the pattern, the writing on the wall. How is this trickling down? Well, it's kind of, it looks obvious, and I think it is obvious. We tend to make things complicated, but I don't think it's as complicated. I think it's very similar to past cycles because institutions are made of people, and people, we're all pretty much the same, right? So watch watch the cycle of it's going to be like the cycle of ETFs. And that's what's going to bring on the alt season. That's what's going to pump our altcoin bags when they finally start rolling money down into the ETFs when they get approved. The game is different in a way, but it's not. It's still the same. It's just we're in a different costume. It's a different skin. Oh, good. Got a comment here. More selling next week. Yeah. I think September is going to be a lot of selling. And we started seeing it this week, you know. But what's beyond that? What is beyond next week? What is beyond next month? What's beyond this year? You know, people think bear markets are very tough to make money in. I think they're very easy simply because we all see price and it just doesn't move or it just goes down, right? We all see that, right? You could just accumulate for the long term, buy on autopilot, and you pretty much get the same price, the same average price. But bull markets are very hard to make money in. It's very difficult to make money in bull markets because prices go higher and higher and higher. and you price out more participants, or you price out people that are sidelined, that are waiting for the dip, and then you get a dip, but the dip's never good enough for the sideliners because they want to get back. They want to get in at a price where it's below where they wanted it, right? The cheaper, the better. And they never get it. And in the rare case that we do, like in April, when everything was crashing, nobody wanted to buy because it looked scary because of tariffs. Everybody was afraid of the tariffs. We didn't even we haven't heard the word tariff probably since probably since we were in school and we were learning about it. We never experienced tariffs, but then everyone became an expert, right? So that scared everyone. They're like, you know what? I'm not buying. Everything's going to shit. That's and that's the game, man. It's like that's the tough game. April changed my life. Hopefully for the better. It was a very stressful time. I would say that. And but for those that took action, yes, yes, it definitely is life changing. It allowed me, for me, I'm speaking for me, it allowed me to get a larger position in assets that I wanted. I was able to accumulate assets at a cheaper price, more than what I had, more than I've ever had. And I was even leveraging up, and it was pretty mind-boggling, and it was very stressful in the fact that I was thinking like, "What the fuck am I doing?" But I just stuck with the process, and we got rewarded. There's gonna become a time, though, where that won't happen, and I would say this, not in the fact that where you're gonna just end up crapping out, more so that the recovery could take a lot longer than what we are used to, than what we expect, right? The recovery from April is pretty amazing. I've been in the like I said, I've been in these markets a long time, and I have never it still blows my mind at the recovery. I knew eventually we would recover, but I didn't think it would be this fast, and it happened. But we gotta stay level-headed. Don't use leverage too much. Don't use leverage when things are euphoric. Right now, you should be getting out of leverage. You should have been leveraging up in April, throughout May. Should have been leveraging up. But now I wouldn't leverage at all. It's too risky. Too risky, and you should have enough to ride out the rest, right? Yes, it might seem, if the markets go higher, it might seem that you might not have enough, and it always does. You're like, "Man, I just don't have enough." And you try to make more and more and more with leverage, but eventually, eventually, the market comes after you, right? At the worst time possible. Think everything's good, and it shows you what's up. So this is just a message to really put it out there that, if I'll give a couple scenarios. If you're under allocated, if you don't have enough, buy enough to where you won't FOMO in if the market takes off and goes higher and rockets higher, because it might happen, especially under the current conditions, the rate cuts, more liquidity coming in space. If those yields start coming down, people that are on the sidelines or just collecting the safe treasury bonds, right? The yields, the 5%, if those yields start coming down, they're going to be looking for risk. They're going to be looking to allocate into the markets. And if you're one that is under allocated and you think, if you have any doubt in your mind that you will not hold your composure and give in, FOMO in at the wrong time, you should allocate some risk now. Allocate enough to where You know, maybe it won't be life changing on the way up, but it would also not be devastating on the way down. It's all about balance, not being too greedy. And then you wait and just wait and see. If we crash or draw down heavily, now you have some dry powder. Now you can start allocating heavily, aggressively. But if we go higher, you're like, okay, at least I'm in participating. And that's it. You repeat that over and over. The cycle will repeat again and again. You will get another opportunity. If maybe you're not fully allocated now, but you will get an opportunity in the future. You don't have to nail every single cycle. You don't have to nail every dip, every rip. Sometimes it's best to just sit back and chill. And that's the hardest part. Sitting on your hands and just waiting. That's the hardest part. They say investing should be boring, and I agree, but it's never like boring, boring, right? Especially now, you're sitting on your hands. It's not boring. It's more anxiety inducing because you sit there, especially now with the markets choppy, and you're like, I have time to get out. I could still get out and make a nice profit. It's constantly going through your head. And that's the toughest part. It's anxiety inducing. So yeah, so sometimes you gotta just get on the rooftop and just light a cigar and just say fuck it. Just fuck it. Whatever. It is what it is. And I'll tell you this. I lived through the great financial crisis. I was in the markets. That's when I started trading. And I experienced a lot of pain because I didn't know what I was doing. I didn't even know what a stock was at the time. I was like, what's a stock market? I was in my early 20s and I was like, what is a stock market? Someone introduced me. They're like, yeah, man, it's this and that. I'm like, okay, I'll try. Made a little money. And then I'm like, oh, I thought I was smart. I was like, oh, this is easy. Why am I not doing this? And then that's when the pain hits. But I'll tell you this, even though we may see some huge drawdowns, gut wrenching price action where you think the world is going to end, I'll tell you this. It's like that saying, if you can't handle me at my worst, you don't deserve me at my best. Right? That's what the market is saying. If you can't handle the market and be in the market and be involved and provide that liquidity support when it's at its worst, then what makes you think that you deserve the rewards? I mean, not only from a sense of like buying low and selling high rewards, but also just making it, you know, making making yourself worthy of that because you avoided all that, all the terrible price action, but then you want to participate in the highs. And it's impossible to do because if you avoid all that, if you avoid the drawdowns, if you avoid when it's at its worst, then it's mathematically impossible to partake in the highs because you're not in. That's simply what it is, right? It's just mathematically impossible. Obviously, yes, if you use leverage, but hopefully you're lucky and you don't get wiped out on one drawdown. That's the risk from there. There's always risk. That's the beauty of markets. You have to take risk. There's no risk-free strategy. No matter what anyone says, there's no like, even if you're delta neutral, man, there's always risk. Always risk. It's like this game never gets easy. It never gets easy. We all know markets go up and to the right. We all see it. We all hear it. We all see people talk about it. But it's true. And you have to keep yourself level-headed and make small, just tiny decisions that are good for you, that are good for what you're trying to do, what you're trying to pull out of the market. You have to be there buying when everybody is screaming for the hills, right? You have to be there, have a plan, figure out, okay, this is go time. Like in April, it's like this is go time. This is where we got to get involved. But times like these, I think these are even more difficult. April was difficult, but this is more difficult. September, August through September, there's nothing going on. So it's very hard to stick with your plan. You start forgetting what the plan was. Write it down. Constantly remind yourself what you're doing, what you're trying to do. I'd say that's 90% of the battle. Pushing the button, buy and sell, that's the easy part. That takes a few minutes. But sticking to that plan, really hunkering down and just pushing aside that emotion, just saying, you know what, get the fuck out of my way. Let me focus on what I need to do. That's the hard part. Like I said, bull markets are the most difficult markets to make money in because prices just premiums get elevated, prices go higher, you get priced out, you don't want higher prices because you missed your opportunity. So you talk yourself out of it. You're like, I could have had Bitcoin at 70K, 80K, 50K, 10K. So you talk yourself out of it. And some people never come back. Or some people think they try to overthink it. They want to be smart about it. Smart, right? You can't outsmart the market. It's just impossible. Nobody knows what's going to happen. So you're better off spending your time and energy making sure you have a calm mind, making sure you're level headed, making sure that what decisions you are making are in line with that plan. Whatever that is, could be whatever. You can be short in the market for all I care. I mean, I wouldn't, but I'm just saying, if you are looking to follow a plan, you got to have that conviction. You got to have that level head, that clear mind. So trying to time the market, thinking to put the plan aside. You know what? Let me just put the plan aside and let me sell everything now, and then I'll be able to buy in cheaper. And then I could resume the plan. Doesn't work. Might work a couple of times, but in the long run, you have to be 100% accurate timing the market, exits, entries. Not only that, your sizing. Will you get in with the same size? Well, if you're getting in at the right time, which is when there's a lot of panic and fear, it's very difficult to get in with your regular size. Like, oh, I'll buy a little bit here. Rips higher, and you're pissed off. You're like, dang it, I knew I missed it. Okay, FOMO in with leverage, liquidated. That's how most people trade. That's why it's very difficult to make money in bull markets. You want to accumulate during bear markets, during crashes, during dips. You want to accumulate according to plan, right? The assets that you want. Pick quality assets. Then you ride the wave. It's like a surfer. As a perfect analogy, being a surfer. You're out in Hawaii, you're waiting for that wave. that wave that's going to take you to shore. You might you might be positioned wrong in the water. Maybe you're not ready. Maybe your wetsuit's not on all the way, and that wave comes and you miss it. You're like, God dang, I missed that opportunity. But don't worry, there's always another one. There's always another one coming. Yeah. So that's what's going through my mind right now. Trying to figure it out. Trying to keep my mind clear by filling it up with cigar smoke. Just like this night. It was just raining earlier. Now it's clear. Some clouds. I can see the stars. But early in the day it was nice and sunny. And all of a sudden these rain clouds came in and it started raining. I'm like, what the hell? Like it was supposed to flood and everything. Now it's clear. I would have never predicted that. As traders, we're like weatherman, right? Trying to predict the weather, trying to figure it out. Like, what's gonna happen? It's like, you know what, man? You don't know. And to waste that time and energy on figuring that out, it's a waste of time. You just gotta live, man, and ride that wave, that flow. Like Matthew McConaughey said in, was it Dazed and Confused? Just living. Livin, just living. That's perfect. That's a perfect summary of how to think in markets. You just want to live and you want to go with the flow. You don't want to you don't want to make it too complicated, too sophisticated, too many tools to rely on. What if the tools don't work anymore? What if the tool breaks? What if that subscription to that tool goes out of business? What happens then? Are you fish out of water? Yeah, keep it super simple, down to the bare necessities, to where you don't need a tool. You don't need technical analysis. You don't need that influencer to tell you what to buy and sell. What if they disappear? You don't want to depend on anybody to tell you what to invest in. It has to come from inside, from you. Any idea is a good idea if you have a proper plan behind it. That's the beauty of markets. You can invest in whatever the hell you want to, whatever you have conviction in. People could have their opinions about it, tell you, "Oh, that's a terrible investment. Why are you in that? Why are you buying that?" But you did your research. You know what you see something that they're not seeing. Yes, you could be wrong. It's part of the game too. That's the fucked up part, is that it might not even work out. That's the risk you take, and that's how you allocate the risk. What's the odds of this working out? Okay, I have my plan set. Okay, maybe not go all in on one thing, on one asset, you know? Get a few different assets, different classes, right? You don't want to be too diversified because then again, takes away from your mental energy to manage 20, 50 different positions, different assets, especially if it's stocks, real estate, crypto, all this, and you got a bunch of different assets across them all. How can you even focus on it to to bring about the best out of that opportunity? You can't. You can't on your own. It's impossible. Yes, you might get lucky and they all work out. Yeah, of course. But if you don't have the bandwidth to handle it, to handle a mass amount of assets to manage, it's just as bad as being like invested in like meme coins. Maybe not, but you kind of get what I'm saying, right? It's you can't you have to be able to focus and be on top of your investments in a way where it's not taking up too much of your of just, we got other shit going on in life, not just investing, right? So you want to spend all your time managing your investments. We got family, we got if you got business, if you got work, if you got other things going on, you don't want any one thing to eat into some of the other things you got going on. It then becomes a burden. And then at the first sign of a profit, hold on, a little loud, sorry. But at the first sign of a profit, you'd be looking to sell and just getting rid of it because it's such a burden. It's not even the fact that it, you know, accomplished your profit target or your goal in that investment. You're looking at it like, oh, it's green. Okay, fuck it, sell it. That's even worse because what if it wasn't ready to be harvested? What if those profits weren't ready to be secured? What if there was more to go, but you were so distracted by all your other things going on in life that you're just in this frantic mode of just of a shitstorm of just things going on that you didn't properly think about it. So that's important too. Don't spread yourself out too thin. Kind of just goes with life too. What do we got? Nah, I got take profit on the spreadsheet for all assets. There you go. See? He's got a plan. You got a plan. I like it. I like it, man. Once it hits it, boom. That's a good way to do it. For me, the way I do it is I look at the markets, what's happening now, and what I think's going to happen, and how am I positioned? Am I okay with the risk? And if I'm not okay with the risk, I take profits. That's how I look at it. And it works out better for me because I don't take profits at the first sign of a profit. I take profits when I feel that the downside is higher than what the potential profit could be. Whereas I don't want to lose those like if the risk of losing a lot of those profits is there, take some off the table. You can always rebuy lower if it goes lower. If not, at least I'm at a manageable risk level where I can ride it higher and still be exposed. I never set a hard set number of like I have to take profits here. Once it hits this number, I'm out. It, I've done that too many times in the past in the early days, and I always found that I always miss out on so much more. Here's an example. I bought Facebook when it first IPO'd. I had it at $20. Meta, for those that are newer to investing, Meta, Facebook, the symbol was FB at the time, Facebook. Amazon, Tesla, I owned Tesla when it was $30 back in, I think it was 2013. Google, before it splits, right? Amazon, all the FANG stocks. Apple, I remember owning Apple in 2009, 2010 at like $80 before it splits. And I got a little bit of profit. I sold it all, and I thought I was the smartest guy in the world. Now look at it. Now look at those stocks. They're insane. They've split plenty of times. They've done multiples of that. Meta's like knocking on $1,000. Like That's what I'm talking about when I say time in the markets. All you got to do is the best thing to do is manage your risk, but stay exposed to the assets that you like. I know I make it sound so simple and easy, but it's not. Definitely isn't. It's not easy at all. But I look back at those times and I can reflect on it because I've experienced it and I'm feeling what it feels like to have missed out on all those profits. And I look back, I'm like, man, if I just held and just closed my like locked my account, changed my password, um, had someone hold the password and told them, okay, don't tell me the password for another 15 years, I would have been better off. That's the lesson there. Yes, if you're trading like altcoins or small cap stocks, that's different. You got to just take the profit and run, right? But I'm talking about quality assets, blue chips. And you may be looking at this like, okay, how does that help me though? Okay, Facebook, Amazon, Tesla, they're so high in price now. Like, how do I have that same opportunity of buying something super cheap? I'll tell you this, you don't have to look at those stocks. Those are I think those are getting into the place of being dinosaurs now. Eventually, they're going to become so big to the point where they're going to become the next Johnson and Johnson, the next Pfizer, right? The next Coca-Cola, right? The old stocks that barely move. That's how they eventually mature too. Today, we have our own Facebook, our own Tesla, our own Amazon, our own Apple, right? That's like Bitcoin. That's like AI stocks. That's all the like, the Robin Hood, the Palantir, right? These are these are like the stocks that are out now that are in their infancy, super volatile. That's where the opportunity lies. Finding that quality, pinpointing those new stocks. Like I said, it's like just like back then when I saw Facebook, I'm like, man, it's new. I would have never thought it would have been this high in price. If I knew if it was going to be this high in price, I would have held it, obviously, but you don't know. Just like today, you still don't know where Bitcoin's going, where all these new hot stocks are going. They're going to become the new leaders, the new large caps. They're going to lead the market. That's how it works. Every generation is going to have their own set of investments that worked for them. That's why even asking someone that's say, for lack of a better term, say you go ask a boomer, like, hey, what should I invest in now? They're going to just tell you what they invested in. They're going to be like, oh, just get some Coca-Cola, get your dividends. That's another thing, man, the dividends, especially if you're under 40 years old. I'm telling you, under 40, 40, if you're under 40, you should not be in dividend stocks at all. I see a lot of I see a lot of 20-year-olds, 30-year-olds, they're all touting their dividend gains. I'm like, "What are you doing?" Dividend stocks are to preserve your wealth. Those are the stocks that were at one time very volatile assets, growth assets. Stocks go through phases. When they're first IPO'd, they're growth assets, super volatile. Yes, they can be painful in drawdowns, but they can give insane returns when they do move in our favor. And being under 40, you have the time to ride. out that volatility. You have to hold on and you have to stay invested in the market and you have to stay invested in these things. And and this is where it comes down to luck. Depending how lucky you are, you could you could make your bag within 10 years, a significant amount. On the long end, on the other end, maybe it'll take you 20 years. It could take a long time. But if you're in dividend stocks and that's all you're guaranteeing yourself to wait 20 years plus to finally get your bag. That's the difference. And it's a painful lesson, especially like for those, yeah, like nobody's born to handle volatility. You have to you have to experience it and you have to become numb to it over time. When I first started investing, I threw like 5K and $5,000 at the time for me was a lot of money. I was I would work 6 months to save up that money and then deposit it into the account. That's 6 months of my time that I was able to set aside of some money to put in a trading account. And I've blown out a couple of accounts. And when I blew them out, it's more devastating. That was more devastating than watching my portfolio swing today. 5K, I wish my portfolio would only swing 5K today. That happens on a per second basis, you know? So it's like you don't come into the game with a set tolerance of volatility, varying degrees of volatility. Everyone starts out the same. Nobody can handle volatility in the beginning, but you have to push yourself to experience it and get used to it. And then you push yourself again and again. That's the only way you're going to be able to survive the swings. You don't want to start out too large. You want to come in with a large bag and then seeing your portfolio swinging 10, 20K in a day, you're going to freak out. You're going to sell everything. You start out small. And naturally so. When we first start working, we don't have a lot of money. Throw a few $100 at a time. You see that P&L swinging like $1 to $2, $10, $5 in a day. You're like, oh, okay, not too bad. You got to push yourself. Put more in as you earn over time. Get in those growth assets. Ride them out. Pick the quality ones. Also have also you want to hedge out that inner herb, that inner that inner demon, right? You want to hedge that out by being invested in the index, like the S&P. It's like a just in case. And then when you get older, when you get over 40 years old, when you get into 50, my plan when I get into 50, start winding it down, putting it into the dividend stocks, right? Preserving the wealth. When when the Fed starts raising rates, I'll start parking money into the treasury bonds. Get 5% and be okay with that. That's the time to do that when you're in that age, when you're older. But right now, when you're young, forget the dividend stocks because you're guaranteeing the delay of getting that bag. It's a guarantee. It's gonna take a long time. The stock, say like Coca-Cola, Johnson and Johnson, right? These high paying dividend stocks, what do they pay like 4%, maybe 5%? You earn 4 or 5% per year in dividends. What is that gonna do for you if you only have $1,000? Not a goddamn thing. So embrace the volatility. Look for volatility. Look for the growth and invest in it. get that bag. It's a big mistake I see a lot of new young investors do. They just jump into dividends and they think that's the way, but it's like, man, it must have been a boomer that told them to do it because, you know, it works for the boomer. Obviously, they have the shit ton of money. They're just like, you know what? Don't even invest in that Bitcoin. Don't invest in that Nvidia and that Tesla because the volatility is so crazy. You know what? Just go into Coca-Cola. That's what I'm doing. I'm 70 years old and I'm doing that. Like, come on, bro. You're from a different era. What were they doing in their 20s, in their 30s? What was Coca-Cola doing back then as far as volatility? I mean, Coca-Cola has been around for a while. So say like back in the 50s and 60s, right? If your grandparents are still around, what were they investing in, right? Real estate, that too, you know? Real estate was a great investment before 2008. I mean, even now it's still a good investment. Not as good as it was back then, though. So you got to find that's the thing. uh, Not even the boomer can tell you, not even the boomer can tell you what to invest in today. That's going to give you those exponential returns. That's the beauty of the markets. You have to find that on your own. You really have to find that on your own, and that's the beauty of it. That's the beauty of life. If it was handed to us, it'd be too easy and it'd be boring. Life would be boring. That's how it spices it up. We got to seek it out. Seek out the treasures. Seek out our treasures of our time, not what your parents did or your grandparents did. It worked for them, but it's not going to work for you today. Not the exact thing they did. It's a different time. Times are changing. Times are always changing. Times are always changing. There are things you could, yes, there are things and lessons you could take from the older folk, right? From your parents, from your grandparents, from people that are older than you. Yes, they could give you lessons, but I would take it more as guidelines and a framework of how to build your own. You can't take the exact game plan. You can't. They went to college and it worked out great for them. You go to college today, it's kind of a waste of time, honestly. Different times. And it might seem like, oh shit, I can't go to college anymore. I can't invest in the assets that my grandparents and my parents did and make the same kind of returns. What can I do? There's always something. There's always going to be something. You have to find it. And I think this in this time, it's crypto, AI, tech, right? Evolving tech. That's what you got to look at, and you look at it not at what it's doing today, but what are the possibilities? What can it do in the future? That's how markets work. They price out the future. They try to price out as far in the future as possible, and that's how you get its pricing. So you cannot look at it what it's doing today and figure out, oh, it's way overvalued. Yes, it's overvalued for today, but it's not overvalued a couple years from now because if it achieves that, whatever we perceive in the future, then it's priced exactly where it needs to be. Now you can front run it and jump in if you have that vision to see. That's the idea. Right. All right. Yeah, I'm going to end it there. I'm going to finish up this cigar. Got a little bit left, but it was a good talk. Don't fuck it up. Peace out. I don't even know how to end this, man. See ya. Yes, no problem. Hopefully you have a good night, man.